if you chip away at the independence of the Fed and you insert somebody into the chairmanship who is willing to lower short-term rates aggressively at the president's behest, you end up sacrificing inflation expectations, and you end up seeing an increase in long-term rates, and you'll ultimately see an increase in debt service costs for the government. That's exactly what Bessent doesn't want. That's also why you heard earlier this week that Bessent was so upset about the DOJ probe. He recognizes that if you sacrifice political independence, you end up seeing longer term and a higher interest rate cost for the government, exactly what he doesn't want.
And of course, this morning, we got the president voicing some reluctance at nominating Kevin Hassett as Fed chair in his latest comments. I mean, of course, things can change by next week, but do you get the sense that the president is now listening to the bond market a little bit more?
I think he is listening to the bond market a little bit more. I think that he recognizes just how difficult it would be to nominate a true loyalist. Earlier this week, we saw Senator Tom Tillis, one of the members of the Senate Banking Committee, say that he would not consider any nomination to the Fed from the president until the entire DOJ probe of Chairman Powell and the Federal Reserve is brought to a conclusion. Now, Tillis is an important member of the Senate Banking Committee. He's not running for re-election in 2026, so he gets to assert a little bit more legislative independence and a little bit more oversight independence. And if he refuses to vote for any Trump nominee, you cannot get any nominee through the Senate Banking Committee into the floor of the Senate. So any Trump loyalist is going to face really long odds. Now, right now, we're seeing Federal Reserve Governor Mickey Bowman jumping into the mix and throwing her name into the hat. She's out right now with comments saying that rates are currently moderately restrictive and that the Fed should not be ruling out interest rate cuts right now. So as somebody who's currently on the Board of Governors, as someone who's made it through the nomination and confirmation process, right now she's vice chair for supervision at the Fed. If she's seen as somebody who has the institutional credibility, she could gain a little bit more traction in the White House, and she could end up being brought to the front of the list of contenders for the chairmanship.
And there's been this sense that Trump's attacks on the Fed might prompt Jerome Powell to stay on the Board of Governors after his term ends. What kind of dynamic would that create inside the Fed?
It would be difficult. I think that there is this real second mover advantage right now. Right now, the president wants to know if Chairman Powell would stay on, and Chairman Powell wants to know who the next chairman is going to be, because if it's someone that he doesn't view as viable or credible, he's going to retain his governorship, Alex, as you said. And in that case, he would really be the person who sets the agenda for interest rate policy.
Like a shadow chair.
He would be a shadow chair. It's the sort of thing that's historically basically unprecedented. I can only think of two instances in history where a former chairman stays on in their governorship. And this is not a modern convention, certainly at all. So it would be truly astonishing. And it would introduce, I don't like to use the word uncertainty, but I'll just say that I think that markets would listen more to Chairman Powell than to the next chairman of the Federal Reserve.